A few weeks ago, I got a piece of mail that I've been expecting for months. And before you jump to conclusions, no, it was not my invitation to finally go on the Dave Ramsey Show and do my debt-free screen. This was a piece of mail that just about every new parent in the US receives, and I just so happened to be a new parent. It was a qualification letter informing me that I was eligible to apply for the Gerber Life Grow Up Plan children's whole life insurance for my newborn son. Woohoo! Now I finally have a good reason to spend time researching children's life insurance, determining whether or not it's a good purchase, and creating this video to help you make a sound financial decision on behalf of your child. Before I dive into the pros and cons of life insurance for children and give you my thoughts on whether or not it's a good purchase, I want to talk about life insurance in general. When you purchase life insurance, you pay a set amount each month, and if you die while the policy is active, someone you chose previously, called a beneficiary, will receive a sum of money called a death benefit. Like any insurance, you're paying to reduce risk. In this case, the risk that your loved ones will lose your income in the event of your death. The death benefit is intended to replace your income so that your loved ones will not encounter financial hardship in the wake of your passing. The two main types of life insurance are term life insurance and whole life insurance. Whole life insurance policies, as the name implies, remain active until the day you die, no matter how old you get, as long as you continue to pay the monthly premium. Term life insurance policies remain active for a specific number of years that you select up front. At the end of the term, the policy is canceled automatically. With whole life insurance, part of your monthly premium goes into a special savings account, and as a result, the cost for whole life insurance tends to be significantly higher than term life insurance. That's life insurance in a nutshell. Next, I'm going to tell you about the pros and cons of life insurance for children and my thoughts on whether or not you should buy it. But before I do that, do me a favor and give this video a thumbs up if you're getting some value out of it so far. Thanks. Let's pretend for a second that I am a life insurance salesperson and it's my job to convince you to buy whole life insurance for your newborn baby. Here are the 4 arguments that I would make. Number 1, it's very inexpensive. In fact, it's the least expensive that whole life insurance will ever be. The older you are, the more expensive a whole life insurance policy will cost on a monthly basis. Once you start that policy, your monthly premium amount is locked in for life. So why not take advantage of the extremely attractive rates by starting your child's policy right now? As this piece of mail from Gerber states, you could purchase a policy for as little as $3.70 per month. That's pennies per day. You'll spend more in a month on diapers than you will in a year on your child's whole life insurance policy. And that leads me to number 2, guaranteed insurability. Did you know that certain medical conditions or high-risk professions can make you ineligible for life insurance? That's right. If your child winds up with an incurable disease or decides to take up a risky career, they may be considered uninsurable later on in life. But if you buy your child a life insurance policy now, that policy will stay in force as long as the monthly premiums continue to be paid, no matter what happens. Adults looking to purchase life insurance may need to have a medical exam as part of the application process, but your child can get life insurance right now without any sort of exam. And if they ever want to have a higher death benefit in the future, they'll be able to purchase more insurance, up to 10 times the amount you select now. No exam and no questions asked. Number 3, funeral expenses. Did you know that the average funeral in the United States costs between $7,000 and $12,000? Is that an expense that your family could shoulder? For just a few dollars per month, you can rest easy knowing that if the truly unthinkable were to happen, you'd be able to lay your child to rest with dignity. And finally, number 4, the savings component. As you pay the premium for your child's whole life insurance policy every month, the cash value component of the policy will grow, with a guaranteed rate of return of at least 2%, far more than you'll ever get in a savings account. That 2% return on investment is guaranteed, and your child can use the cash value later on to help pay for college, cover the cost of a wedding, or even to put toward a down payment on a home. So what are you waiting for? Your little one won't be little for long. Give him a gift that he'll truly be grateful for when he grows up. Pretty good sales pitch, right? makes whole life insurance for children sound like a great deal. But when you're dealing with a salesperson, you know you're only getting one side of the story. What are the downsides to purchasing a whole life insurance policy for your child? Let's look at each of those 4 selling points and consider what someone on the other side of the fence might argue. Starting with number 1, it's very inexpensive. And technically, it is. You can get a policy for less than the price of your Netflix subscription. But just because something's inexpensive doesn't always mean you should buy it. Remember from earlier how I said the purpose of life insurance is to replace your income for those who depend on it in the event of your death? Well, does your child earn income that you depend on to live? No? Then there's no need for your child to have life insurance. Period. End of story. And that policy from earlier for $3.70 per month, that only gets you a death benefit of $5,000. If you want whole life insurance with a meaningful death benefit, you're going to need to spend a lot more money. Number 2, guaranteed insurability. For many people, this is the strongest argument in favor of children's whole life insurance. Your child might develop a medical condition between now and adulthood that could make them uninsurable later in life. If you're genetically vulnerable, this is an especially compelling argument. But the list of conditions that make someone truly uninsurable is relatively small. Even for someone with a condition like type 1 diabetes, it's still possible to purchase a life insurance policy, as long as that condition is being managed effectively. It might cost a little more, but in many cases, it's not impossible to get a policy in place. For those who enter into dangerous professions, group life insurance plans are frequently available through their employer or their union. And regarding the ability to purchase additional insurance and increase the death benefit on the policy regardless of one's health, this is a whole life insurance policy we're talking about. Again, to get a truly meaningful death benefit that could theoretically replace your income in the event of your death, you'll need to fork over $300 or $400 per month in premiums every month for your entire life. That kind of money is much better spent elsewhere. Number 3, funeral expenses. It's true, the average funeral in the United States does cost between $7,000 and $12,000. But how likely is it that your child won't make it? Infant and child mortality rates are extremely low in the US. As of 2018, for every 1,000 newborn babies, 996 of them made it to 4 weeks old, 994 of them made it to 1 year old, and 993 of them made it to 19 years old. And in the extremely unlikely and unfortunate event that your child is among those who don't make it, and you don't have an emergency fund set aside to cover funeral expenses, there are less expensive death care options, some of which can cost less than $1,000. Our friend, the life insurance salesperson, must have forgotten to mention that. It's not like a 5-figure funeral is the only choice you have. Number 4, the savings component. Yes, it's true. Some of your monthly premium on a whole life insurance plan goes into a cash value savings account. But why not maintain complete control of that money by putting it in a brokerage account? Or if it's going to be used to fund your child's education, a 529 plan. What our friend the life insurance salesperson failed to mention was that if you withdraw funds from a savings account attached to a life insurance policy, the death benefit will be reduced by the amount you took out until it's paid back. By using one of the other options I just mentioned, you'll be in complete control of that money. You'll have the opportunity to earn a much better return on investment than you would in a whole life insurance policy. And you won't ever have to worry about repaying the money you took out from the account. If you haven't guessed by now, I'm not planning to buy whole life insurance for my son. I feel that it's overpriced for what you're getting, even if it is just a few bucks per month. The likelihood of him becoming uninsurable by the time he reaches adulthood is small, just like the probability that he won't make it to adulthood. Instead of spending money on life insurance for him, I'm going to put money into a 529 plan so his education will be paid for once he graduates from high school. That being said, there are a few circumstances in which I would consider life insurance for a child. First, if your child happened to generate a significant amount of income for your household, as in the case of a child actor or model. And second, if you had no emergency fund and you were set on spending $10,000 on a funeral in the unlikely event of the child's death. In either of those situations, I would still pass on the whole life insurance policy and instead opt for an add-on to my own term life insurance policy. That way, you get the death benefit without the added expense of the savings component, allowing you to save for things like your child's future education in a more efficient way. What do you think of whole life insurance policies for children? Will you be purchasing one for your child? Let me know in the comments. Hey, if there's one thing I appreciate about whole life insurance mail offers, it's the free return address labels they include in the envelope. I always get some mileage out of those. Who's with me? If you enjoyed this video and would like to learn more about how much term life insurance you should purchase for yourself, then click right here. And if you're not yet a PPF subscriber, then click right here. As always, thanks for watching. I'm Andrew Scheer, and I'll see you next time.